Hey guys, how's it going? It's Andy from Magoo Investing. Happy Thursday. So Wall Street Bets and GameStop has been pretty much the attack of pretty much every social media that I'm a part of. This has been probably the craziest week that I've seen in the stock market, and I've been through the market correction of 2018 going into 2019, the stock market crash of 2020, and the only time that I've had similar interest from people that are not involved in the stock market comes from this previous spring when oil futures went down below negative, and it was a very interesting time, and I had to explain to people what was happening. But there's been more talk about GameStop from kind of the general community than I was kind of expecting. So in today's video, I'm going to be talking about GameStop and more specifically Robinhood, and explain what I've seen with Robinhood over the past 3 years and me being on the platform, and kind of explain how this type of scenario is not that surprising for people that have been paying attention, because there's been some red flags going on for a while that has shown that something like this could happen. So in today's video, I'm going to be talking about what I've seen with Robinhood that made a situation like this with the massive momentum behind something like a GameStop possible. And I'm going to be talking about some of the examples that I've seen over the past year and a half that has made me not super surprised that something like this has happened. So I'm not going to be explaining exactly what happened with the short squeeze, because there have been plenty of examples on YouTube. I've been seeing them on Twitter explaining what's happened, so I don't feel the need to be talking about that. So I'm going to be talking about what I've been seeing on Robinhood specifically, and what stocks I've seen in the past that something like a Wall Street Bets has moved, and kind of give my thoughts on the whole situation, because it is absolutely fascinating. So before we get started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it for the like and subscribe button, as it would help my channel out a lot. So first, let's talk about the Robinhood app has set up the situation to happen, because it's been really interesting to watch. For the longest time, it was impossible for smaller traders to get involved with swing trading or day trading. For people that don't know, day trading means that you enter and exit on the same day. Swing means that you have in and out within a couple weeks, maybe a month, depending on who you talk about. What this needed in the old days is that you needed to have a lot of cash involved, because commissions were a thing. Commissions are basically the idea that you're paying a fee for each transaction that you do. So you have to do one open and close the trade. And on average, it was like $5 to $10. So for a smaller investor that's investing with $1,000, back when I was day trading, the whole goal for myself was to make 1% every day. It might not seem like a lot, but you put that together with 200 days trading over the course of the year, those are some huge returns. So for a $1,000 portfolio, I'd be needing to make $10 a day. If I'm day trading and I'm going to be opening and closing a position, I'm already going to be down $20. So I'm going to need to make $30 a day, or 3%, to make the 1%. So this adds up for these smaller accounts and doesn't really have anything to do with the larger accounts, where $10 is absolutely nothing when you're making and trading with millions of dollars. So Robinhood comes around and introduces commission-free trading, and this absolutely changed the game for these smaller investors, because it allowed people like myself to get into the stock market and try my hand at day trading. Obviously, I wasn't that great at it, which is not why I'm doing it anymore, but it has pushed all the major brokers to remove their commission. That's why I decided to finally move from Robinhood to TD Ameritrade, because I had started to improve my trading skills and I wanted to get involved with options. Speaking about options, I am going to be the proud shareholder of 100 shares of General Electric stock, ticker symbol GE. And the way that I usually go with these trades is I sell a put. If I get assigned, I end up selling a call. And so I want to show the difference between the interfaces on Robinhood if I'm trying to be selling a call in GE compared to TD Ameritrade. For someone like myself that understands the Greeks and needs the Greeks to go along with my trade plan, having TD Ameritrade is very important to me. But when you look at Robinhood, it is much sleeker, it's much more attractive, and for people that are much newer to the investing game, it can be more attractive, especially because it shows the percentage profit. That has led to some accusations of Robinhood treating stuff kind of like gambling, and there have been some lawsuits associated with it. But we definitely saw a major increase in popularity for Robinhood when the pandemic hit. And so in 2020, we saw some major increases in retail trading, and it has been compared to what we saw with the dot-com bubble. When we've been seeing that, this is the beginning of a new cycle of investing. Back in that time, around 2000, people were starting to be able to trade online, and it allowed for people to not have to go in and call their broker, which for someone like myself that hates talking on the phone, I would have never been involved with the stock market if I had to call my broker to make a trade. But it's allowed people to trade online, and it shot up the price of a lot of stocks because there was not this kind of rationale that a lot of these traders have been used to. And now we've been seeing a lot of changes in the stock market because of the popularity of retail trading. Just back in 2019, 10% of the total volume traded on the stock market was from retail traders. And in this past summer, retail trading made up 25% of trading volume. So this means that retail traders are being a bigger mover in the overall stock market than they've been in the past. And so we've been seeing some very interesting examples of stocks that in the past would not have done well have been doing very well, especially this past summer. And this has changed the power dynamics in the stock market. And one of the areas that we've seen this has to do with the increase in the volume of options traded. So in 2019, we saw 1.7 million options traded per day on average. And in 2020, that was up above 4 million. So this is more than double in 1 year. And so now I want to talk about the places where I've seen Wall Street Bets have an impact, because there's been a lot of discussion on if Wall Street Bets has been manipulating these stocks and if it's legal. And first off, I want to say that I believe it's 99% sure that it's fully legal. But the stock that I kind of put synonymous with Wall Street Bets has to do with Tesla. Tesla was one of the most shorted stocks for the longest time because people didn't believe in the vision of Elon Musk and the company of Tesla. And so what had happened was Wall Street Bets was very bullish on Tesla overall. And there were a lot of people talking about how they were taking positions, long positions specifically. And when Tesla ended up beating expectations like 8 quarters in a row, people made a lot of money. And so there's been the argument that Wall Street Bets has pushed Tesla up. The difference with Tesla compared to what we've been seeing with GameStop has to do with the ability to move the stock. And the way that that's kind of judged has to do with the float. The float is the number of shares outstanding. The higher that number is, the more shares it takes to actually move the overall price. And for a stock like Tesla that is relatively expensive, it costs a lot of money to move that type of stock. So while Wall Street Bets had an impact and probably pushed the stock up a little bit, this is not anywhere near what we've seen with something like a GameStop. So the lower the float, the more easily a stock can be moved. And then with the market crash in March, people started noticing high levels of interest from Robinhood traders when it came to these beaten down sectors like the airlines and the cruise stocks. These were stuff that the experienced traders on Wall Street didn't want any part of because these were beaten down industries that were not going to be making money anytime soon. And these were stocks that had much lower float. So you had these newer retail investors coming in and pushing up these stocks. And a lot of the people on the talk shows on CNBC were very confused on what was going on. And it's the retail traders coming in. And since there's not a lot of interest, they're able to move up the stock a pretty good amount. Then we get to the first weird example of a Robinhood stock with Hertz, ticker symbol HTZ. This is the stock that I got in and made a quick $200 on just for like 24 hours of exposure. So Hertz stock declared bankruptcy, and then immediately after it, the stock skyrocketed 900% within a couple of days. And here's how the Robinhood interest changed over time. And you can see that the retail traders came in aggressively and bought up the stock that had already gone bankrupt. So looking at the stock, it had a float of 155,000, which is much smaller than what we saw with something like a Tesla. And then you have to take into account that the stock was trading between $1 and $10. So it was much easier to move because you didn't need as much money to move the stock. In addition, this was an example of a short squeeze because a lot of people were betting against Hertz. I mean, it was a company that just declared bankruptcy. So when the stock price goes up and people are confused by it, a lot of people closed out their shorts to push the stock up. But then eventually, I think it's important to talk about that the stock price has gone back down to normal. Just keep that in mind when we're talking about GameStop in a little bit. And then that's all culminated in GameStop in the past month. And so it's been the perfect storm of a beaten down stock that people don't have a lot of faith in, extremely high, almost suspiciously high short interest, and a lot of naked options that are potentially being used. And this is an illegal tactic for selling options for shares that aren't available. That's why you've had some places where short interest is over 100%. And so just like how the world works pretty much, where the rich and the people that have influence run things, there's been a lot of people that have been calling for some regulation when it comes to GameStop. You've had people that have been calling for a 30-day trading halt because there needs to be some investigations on what's going on. And it does kind of feel like a legit Robinhood situation where these smaller investors are taking from the rich and giving to the poor. And it's been very interesting to watch because I've been seeing people that have never talked about the stock market before be very excited. One of the things I'm worried about is that people are treating it kind of similar to what I've been seeing with penny stocks. When I do research for what stocks I think people want to hear about, penny stocks come up a lot. And the reason behind that is because they're very easy to manipulate because they have a very low float and they're very cheap. This is kind of what we've been seeing with GameStop, where it was a very cheap stock, but now it's getting to the point where it's all momentum based. And it's going to be very interesting to see what happens. Going on this, I want to talk about short selling because I think it needs to be regulated in a different way. For people that don't know short selling, a lot of times the way it happens is they'll short a stock, they'll come out and publish some BS about the company, usually about a flaw with their fundamentals. The stock price falls, they cover their shorts, they make a lot of money. An example where I saw that recently has to do with Jumia stock, ticker symbol JMIA. This is a stock that was shorted by Citron. They came out, said that there was some problems, likely a fraud case. The stock falls by 50%. They buy in, and then they start pushing up the stock and talking all these great things about it. So Wall Street has been manipulated for a long time, but now that it's on the other side of the ticket and the smaller investors that have come together onto this public forum to talk about stocks, and they're making money, people are getting upset. So it's going to be very interesting to see what happens going forward because When these smaller investors are making a lot of money and it's coming at the cost of these major hedge funds, people are going to be pissed off, and it's going to be very interesting to see what happens. This is not the only time that we see people manipulating the market. I have always talked about why I never set my stop losses for even numbers, because the thing that happens commonly is that these major market movers will sell down to an even dollar amount, because a lot of people set their stop losses at that point. The increase in selling pressure, because that sell happens automatically when it reaches that level, pushes the stock down. These market movers buy back in and pushes the stock right back up. And it usually looks like a quick little blip on the charts, but these are the major market movers manipulating the market to their benefit. And so this is not the only time we've seen this. Obviously, we've been seeing a lot of momentum, a lot of hype behind stocks like GameStop, AMC, and BlackBerry. Likely this is not going to continue for the longest time. I think it's very important to look at the way that penny stocks are traded in the past, because a lot of times you see this major move up, and while it has not been sustained as long as what we've been seeing with GameStop, the party is going to end eventually. And so it's all fun and games when people can go on Twitter and be making jokes because everyone's making money, but eventually this is going to pop and GameStop is going to fall out of the sky. From what I've been seeing, the fair value for something like a GameStop is currently sitting around $20, and it's up around $3.50 right now. So it has a long way to go, and that's going to result in a lot of people losing money. So as of right now, it's all fun and games until the bubble pops. Yeah, so it's going to be very interesting to see what happens with GameStop. I am out of the office today, as I'll say. I'm going on a super long hike, so I'm not going to see what happens on Thursday. So I'm very curious to see what happens when I show up on Thursday night to see what the damage up or down has been on GameStop. So thanks for watching. I appreciate all the support, and I will see you in the next video.